Yo, what's going on, everybody? Welcome to the channel. Today, I'm going to be talking about inflation and how it correlates to our current economy. It's going to be a super quick and comprehensive video. I'm not going to drag on too long, but I'm going to be talking about, some main topics and some key points I think that I've developed in the last couple years and some things I think everybody should really fully understand. So, thanks for tuning in. This will be financial education episode number 2. So, what is inflation? Essentially, it's the rate of increase in prices over a given period of time. So when we think about inflation, a lot of us, including myself, as consumers, we think about a rise in price, right? Well, really, it's an expansion of the money supply. As the money supply inflates, think about a balloon with all the money. As it inflates, the dollar diminishes value. It's worth a lot less than it was before because there's more of it going around, right? Just kind of simple supply and demand. So how do we even find this number? How do we even measure this number? So we have a thing called CPI, or Consumer Price Index, which is basically just a basket of goods that all get compiled together. I think it's like 94,000 products and services. So they all get bundled together, and then we find out the mean increase over the last month or the last year, and that's how we find inflation. So you can see, like at the bottom right, inflation might be 6.4%, but as a lot of us saw during COVID, food might have inflated, 11.3%, electricity almost 12, and then natural gas 26 point, so it's a very broad basket, and there's a lot of things that are going to be on the lower end and a lot of things on the higher end, and some outliers, in between. So it's not the best accurate representation that we have, but it's just kind of all we have right now. So what is optimal inflation? This is where we want the number to be. Inflation is inevitable. It's going to happen. In our day and age where we borrow and spend so much money, inflation is inevitable. It's going to happen. So what a lot of very smart economists have found is that 2% is a pretty healthy number. If your economy is growing by 2% every year, you're on route for a good increase. And that's unemployment aside and everything else aside. 2% is a pretty healthy number. But we've seen a 9.1% increase. Over the last few months, we've seen very high troubling numbers. Numbers that are 4 times what we like them to see. So I guess the next question is why? Why is inflation this crazy? I thought COVID was a couple years ago. Now we're on the other half. We're on the latter half. We should be booming right now, right? So no. So why are we seeing this? One of them is lingering COVID disruptions. I mean, obviously, I don't need to harp on this too much. You know what I mean? COVID disrupted everything. Every business had to pivot a little bit. It benefited some, it hurt many others. COVID it did a toll. It did a toll on our economy. It stopped everything, and then everything had to reset. And it didn't always some didn't reset, but it didn't always reset the way that we wanted it to. Number two, government. I guess 2 and 3 are pretty tied together. Number two, why are we seeing booming inflation? Government spending. Our government spends a lot of money, and what the Fed and the government are really tied together. Of course, they're two separate entities. That they always like to say they're very separate. But when the government wants to spend a bunch of money, who's the first person they talk to? The Federal Reserve. Hey, you got some money we can spend? And usually the answer is yes. So a lot of people think about inflation as a tax, as tax in a different sense, because obviously if you raise taxes, that's very unpopular. People are not going to want to vote you again. There's a lot of problems that come with raising taxes, but if you just spend a bunch of money and just, tack it to inflation, that it can kind of slip under the radar sometimes. And sometimes we like to blame, greedy corporations or other things on inflation. And a lot of the time, the government's spending a lot of money. You saw like the stimulus packages and all that kind of stuff. The government was spending a lot of trillions of dollars of money, and that's a whole problem in itself. And then the third one is the Ukraine-Russian war. We're sending a lot of money over there. Regardless of your opinion on it, my opinion is that we are in a war as the American people. We're not fighting. We're not boots on ground by any means. We're not sending missiles over there, but we're sending a lot. We are sending missiles for them to shoot. You know what I mean? We are sending a lot of our tax dollars are going over there. So I think in many senses, we are fighting a war right now as American people. But it's just one of those things that just takes, it's very opinionated. Not everybody has the same opinion, right? So what happened recently is the Federal Reserve had a meeting with Congress. They've been hiking these interest rates, which have been going up, going up, going up, and they decided to raise them again by another 0.25%, which that's fine. That's probably what needed to happen. Inflation is still kind of crazy. They still have to get it under control. That's what happened. I mean? I think the most key thing to understand is that our a couple months ago, our goal for inflation was 3.1%. That was our goal. So at the end of the year, inflation is going to be down to 3.1%, close to that 2%, which is I mean, that's awesome. If we see 3.1 inflation, that's great. We did a good job as an economy, as long as not many banks fail and all the other stuff that comes along with it. But Jerome Powell came out and said that, oh well, instead of 3.1%, maybe let's take 3.3%. You know what I mean? We're only a couple months into the year, and they're already kind of raising that number a lot, which I think is kind of a troubling thing to think about. And then he also hinted, which I don't know why the man doesn't just go out and just say it flat out, but he hinted that controlling inflation is more difficult than expected. It's kind of one of those like no-brainer things that it's like, well, yeah, we've been seeing it. It's been lingering for a long time now. Of course, it's a little bit harder to deal with than we thought. So another key point is, yeah, this is the same entity that declared that this inflation was transitory, and it'll be back by 2% by the end of the year. Don't worry about it. Transitory is temporary, if you didn't know. So just saying that, oh, it's a very temporary thing. It'll go away quickly. Well, we didn't really see that. And I have a graph that I'll show you guys that kind of reflects that later on in this video. And then he also pointed out that we'll likely see unemployment rise to 4.5%. That's a scary thing because that's probably a pretty conservative estimate. If a lot of their predictions are off in a negative way, we might see unemployment go up to 4.8% or something along the lines of that. So will we avoid stagflation? Now, for those that don't know, stagflation is an increase in unemployment rate, which is bad, an increase in inflation, which is bad, and a slow economy, which is bad. So it's like the worst thing that you could have in an economy. The reason we kind of avoided during COVID was because this number shot down pretty quickly. Unemployment obviously went crazy during the lockdowns and all that kind of stuff, but it went somewhat back to normal. After a little hiccup here, it went pretty far back down to normal. Now, this is not a complete accurate representation. There are problems within measuring the job force, just like there are with inflation and CPI and stuff. And there's a lot of discouraged workers and stuff that comes along with it. But in most sense, we avoided stagflation because of this low hike in unemployment, which is a good thing. But will we see unemployment rise back up as inflation is slowly going down? Are we going to see unemployment kind of take a hike up, which would not be ideal for us right now? So how did the market react to this news? Just about how you'd expect. Bloodbath. Everything's red. Nothing great. I mean, you have like some outliers, but like Nvidia is a weird one, and I don't even know it. All right, yeah. But most everything's red. All of the large sectors are all red, and I think the biggest key takeaway from this is real estate. Real estate got hit. This is a one-day relative performance. Real estate got hit, and in my opinion, we're going to need to see real estate kind of get slaughtered a little bit before we really see a productive reset in our economy. Before we really start going back up, I think that real estate is going to have a lot of more devastation. It's crappy. It's unpopular. It's an unpopular opinion. But that's just the way I feel. Real estate's been kind of holding on a little bit. Mortgage rates kind of held on, although interest rates are crazy. But yeah, I think that once we see real estate get hit a little bit harder, I think that's when we'll get more bullish investors and we'll get people that are, really ready to throw money back in this economy. So here I have a comparison of inflation and interest rates over the last year. So as you can see, we were hardly hiking interest rates. I mean, I think this is 0.25%, 0.5%, 0.75%. And it's tough. It's in hindsight is always so much clearer than what's happening in the current time. But looking back, man, we needed to hike interest rates a lot further back when it was 8.5%. I think that this 8.5 to 8.3 kind of gave us like a false sense of security where we're like, oh, look, this is doing something, right? We're good. We're going back down. No, that's not the case. We went back to 8.6, and then once we got this, I mean, this is scorching hot. I remember when that 9.1% inflation came out, it was troublesome. The market got hit. It was that is not something that anybody wants to see. 9.1% is absurd. That is a high number, much higher than I think analysts even predicted. It was a scary thing, for a little bit. So that's when we took that 0.75% hike. We said, okay, something needs to happen. It did. We kept going down. And you can see that since October, it's gone down pretty steadily. We are seeing a decrease. So I think this is this is something that we should be somewhat, I guess, proud of, or I don't know. We should at least be optimistic about this because I think that we are heading in the right direction, and although interest rates are crazy high, we just saw them raised by another 0.25%, at least it's doing something, right? At least it's doing something beneficial, and we will see the adverse effects of that. We'll see the negative of it. I think that in unemployment is one, and obviously just a general slowdown in the economy we're seeing right now. But I think it's important to note that inflation is slowing down again. We are getting this number under control. From 9 to 6 in a few months is good. I guess for as high as it rose, it's good to see it coming down. I think that's the good thing to note from that graph. And then finally, this is the last slide that I have. I'm not going to talk too much about it. I just, I kind of want to leave it up for interpretation. Maybe this can be the basis for some of your research. But these are all of the inflation numbers throughout just February. So just, I guess, summer, January. But these are the February inflation numbers. So what I think are the most important to kind of look at, China coming in at 1%, and obviously their COVID policies are super locked down, so no huge surprise, but 1% is that's unhealthily low. That's an unhealthy number. United States coming in at 6%, that's pretty casual. You can see how we lined up against kind of some other people. Canada's starting to get theirs under control, which is a little bit surprising, I guess, in a sense. And then, yeah, I guess down here you have Turkey and Argentina. Argentina got hit hard, 102%, coming off of 98.8%. That's scary to think that if this keeps up, their money will be half of what it was last year. Wow, that's crazy, right? And then you got Russia coming in at a hot 11%, which is good to see because I guess it kind of says that our sanctions are paying off a little bit. I don't know. So I just kind of left this up for interpretation. I don't care to dive too deep into it. But maybe, like I said, maybe it's causes for some basis for your research when you go out and do whatever. So I appreciate you all tuning in. This is all I had for you. Like I said, hopefully it wasn't too long of a video. But yeah, I figured I covered some important topics. So I really appreciate you tuning in. Please leave a like and leave a comment if you have any further questions. And thank you all and have a great day.